Jim here from FX Charts. Thanks for tuning in this morning. Well, it was actually a reasonably active session today despite the US holiday. Firstly, we got a decent bounce in the Aussie after the strong Capex numbers yesterday in Asia. And then later in the day the Euro showed some strength after some higher than expected inflation data out of Spain and regional Germany. And cable also that headed north after a relatively hawkish outlook on the UK economy from the Bank of England Governor Mark Carney. The yen and the Kiwi, they are under a little bit of pressure still though. We've got some Japanese data out today. There's quite a swathe of Japanese data out today that could push the yen around a little bit later on. In the European session we've got the EU CPI and the jobs data, but the market will begin to thin out a bit later on. With not too much activity expected out of the US, although it is month end, so we could see some position squaring, some month end balancing. Anyway, we'll go and have a look at the charts, and as you can see in the Euro, we spiked up to 136 from the holding the support around 135.60, spiked up to 136.18 actually, and it's since holding around that 136 level. Now the hourly charts are fairly flat. They look as though they could be running out of a little bit of steam on the top side, but I don't expect anything too dramatic. The 4-hour charts could be rolling over a little bit, but once again I don't really expect too much. And within a sort of 135.80, 136.30 range, I would expect that to hold for pretty much most of the session. The European data could push it around a bit, but the markets are going to be fairly thin. You have to be a little bit careful of an exaggerated move in the illiquid markets, but realistically if we finished up around near 136 around current levels, I wouldn't be too surprised. Dollar yen, likewise, that's trading just under this, the red line here is that 102.53 level of last May, and we're not too far away from there. It wouldn't surprise to go up and try and touch it. I don't think we're going much further though, because the 4-hour charts are showing some bearish divergence, and the stochastics are a little bit overbought, so it wouldn't surprise me to see the dollar come back down. We could come back and test this trend line here. That's about 101.5. Probably not today though, unless the Japanese data pulls the dollar lower. I don't really expect too much action though. In the longer term, we're headed north, and I think we're probably eventually, if 102.5 can be taken out, then there's nothing to stop it going from to 103 in that 103.70 area of last May. Sterling, that's had a pretty good run following Mark Carney's speech, having broken through 162.40 and the previous tops around 162.60. Hasn't really looked back at this stage. It looks pretty good for further gains next week. Not sure once again that we're going to go too far today given the illiquid conditions, but momentum is pretty strong, and I think eventually we have to go a bit further out, but let me just blow that up. Further out we're looking at 163.80. That was the December the 31st high, and then we're looking to sort of levels beyond 164, but I think we wait until next week for that. Dollar Swiss is heavy still. It remains within this channel. This is a 1-hour chart. It remains near the base of the channel. It looks as though it might be forming a bit of a wedge. There's going to be good support down around here, around sort of 90.20 or so. But the charts do remain a little bit heavy, and the dailies actually have some slightly negative momentum, and we might just be pushing a little bit lower. I don't think though, for today I'd be very surprised if we went anything under sort of 90.20, and certainly I think 90 figure should hold on the day. The Aussie, well, that bounced, as I said, after the Capex number. It might have formed a little bit of a base here. It's trying to bottom out. It did get up to 90.49 in Europe. Didn't like it up there. It's come back off. Now I'm not sure directionally. We're still within this channel. The base here is around 90.50 today. I'm not sure that we're going to see that, and it wouldn't surprise me to see some hovering at current levels. Maybe the Aussie is trying to form a base, I think, but it's not really very convincing. And a longer term, I think we are headed lower, back towards that 90 cent level. And the dailies are showing some pretty negative momentum. But on the day, I'd probably use 90.70 to 91.40 as a guide, and I think we just chop around within that. The Kiwi, much the same. It still looks very heavy actually. Sorry, the Kiwi. It's the Aussie Kiwi cross took an about turn. It bounced off a 5-year low. It's sort of just above 111, and it's back above 112 at the moment. That's keeping the Kiwi under a bit of pressure, but it is holding 81 the figure. It's been down to this sort of 81, 12, 13, 14 area a couple of times now. I'm not sure we've got the momentum today to push on lower. We may do, and I think eventually, as I say, we've broken the head and shoulders neckline now. We are below both the 100 and the 200-day moving averages, and if we can make a move lower, then I think that 78.50 down around here is where the head and shoulder neckline is. Not sure we're going to do too much today, but certainly if we did see a bit of a rally, I'd prefer to sell into it. So that's about it. It should be a fairly thin session later on, as the US is pretty much out for the count and celebrating Thanksgiving. So I'd be a bit wary of exaggerated moves in thin conditions. But really that's about it for the day. So have a very good weekend. Have a good day's trading, and we'll speak to you again on Monday. Cheers.